All right, so you're an artist in Canada. You're pouring your heart and soul into your work, but let's be real. There's one word that can make any creative shudder: taxes. It feels intimidating, right? Well, today, we're going to pull back the curtain on the whole thing. We're going to break down how the Canadian tax system actually works for creative professionals like you.
And look, having the right information, that's everything. It's what gives you confidence. Our whole goal here is to give you a solid game plan. A framework so you can spend less time stressing about spreadsheets and way more time doing what you love, actually creating.
Okay, let's get right to the heart of it. This is the question, isn't it? The one that keeps so many artists up at night. You're spending all this time, all this money on your supplies, you're in the studio at all hours, but in the eyes of the CRA, the tax folks, is it a real business or is it just a very expensive hobby? Because honestly, the answer to that question changes absolutely everything. And right off the bat, I've got some good news for you. Believe it or not, the CRA gets it. They actually understand that the path of an artist isn't some straight line to profit. You might have years, literally years, where you're losing money before you start to make any. And you know what? That's okay. In fact, it's now on the record that just having losses year after year is not enough for them to say, nope, you can't claim your expenses. That's a huge deal.
So here's what we're going to cover. First, we'll dig into that business versus hobby question. Then, we'll talk about the CRA's profit test. After that, the fun part, your creative deductions. We'll also look at some special rules just for artists, and finally, wrap up with how to handle things like grants, awards, and other income.
All right, first up, the profit test. I know, that sounds super intimidating, like some big exam you have to pass. But it's not like that at all. Seriously, think of it more like a checklist. It's a set of guidelines that helps you prove that you're taking your art seriously, like a pro. It's all about showing what your intentions are.
So, what are they actually looking for? Well, it's really the whole picture. For instance, how much time are you actually devoting to your art? Are we talking an hour a week, or is it basically a part-time job? Are you putting your work out there, exhibiting, trying to get published? Do you have a dealer or a gallery? They also look at things like, do you have a plan? It doesn't have to be some 50-page document, but do you have a course of action? Are you promoting yourself? And yeah, they're even going to look at the type of stuff you're spending money on to see if it makes sense for a business.
And it doesn't stop there. They also look at your background. What are your qualifications? Did you go to art school? Have you won any awards or grants? They'll check to see if the value of your art is going up over time. And this is interesting. They'll even consider outside factors, like if the economy's in the tank and nobody's buying art. See? It's not just about did you make money this year. It's about the entire story, the whole professional narrative of your career.
Okay, so once you've shown you're running a business, this is where things get really good. You basically unlock a financial toolkit. We're talking about deductions. This is how you start getting back some of that money you're pouring into your career. And think about it this way. It's not just about saving a few bucks on taxes. Every dollar you deduct is a dollar you can reinvest in your next creative project.
And let's kick things off with a big one. This is a direct quote from the CRA's own position. They say artists can deduct the cost of lessons to develop their talent. I mean, stop and think about that for a second. That is huge. It's the government officially saying, we recognize that your main asset is your talent, and spending money to make it better is a totally legit and super important business expense.
All right, let's get down to the nitty-gritty. What can you actually write off? Think about all the money that goes out the door. Your agent's commissions? Yep, you can deduct that. Rented a van to haul a giant sculpture to a gallery? That's a deduction. Had to travel for an out-of-town show and pay for a hotel and food? Deductible. Insurance on your instruments, repairs, even things like special makeup or getting new headshots. It's all part of the business and it's all deductible.
And this just hammers home that point about investing in your talent. It doesn't matter if you're an actor taking lessons for a specific role or if you're just taking lessons for general self-improvement in your field. You get to deduct that cost as a business expense. It's that simple. Your own development is a direct, claimable investment in where your business is heading.
Oh, but we are not done yet. The list just keeps going. The cost to record a performance or an audition tape, that's an expense. Cleaning those specific costumes you need for work, deductible. Now, what about the really big stuff, like instruments or professional equipment? You don't write it all off in 1 year. Instead, you claim a piece of the cost each year. That's called capital cost allowance. And of course, you've got your home office expenses, the portion of your car you use for work, even things like magazines and journals related to your field.
Okay, so we all know the life of an artist isn't exactly a straight 9 to 5. It's got its own quirks. And the tax code, well, it actually has some special rules to match. So let's dive into some of those unique situations, like what to do when you're juggling a day job, how to handle your inventory, and even how to deal with donating your art.
So many artists are in this boat, right? You've got the day job that pays the bills, and then you've got your creative business that you're hustling to build on the side. Well, the great news is you can absolutely still claim your art-related expenses. The only trick is you have to be fair about splitting any shared costs between your job and your art.
Now, I know this looks like a bunch of math, but stick with me. The idea is actually really simple. Let's use your home office as an example. Say your total allowable home office expenses for the year are $2,000, and let's say you spend 10 hours a week on your art and 40 hours on your day job. So that's 50 hours total, right? The formula just means you can claim the portion related to your art. So 10 hours out of 50, that's 1/5. 1/5 of $2,000 is $400. That's what you can claim against your art income. It's just a way to be fair about it.
Okay, visual artists, listen up, because this one's just for you, and it is a fantastic rule. For most businesses, you buy materials, and you can't deduct the cost until you actually sell the thing you made with them. But not for you. The CRA lets you write off the cost of all your materials, your paints, your canvases, your clay, you name it, in the very same year you buy them. This is a total game changer for your cash flow.
Now, what about donating your art? This can actually be a really smart tax planning tool. You've got two main ways to do it. The first is a certified cultural gift. This is when you donate to a special designated institution. You get a tax credit for the full value of the art, and get this, you don't have to add that value to your income. It's amazing. The second option is for other charities. Here, you can value the art anywhere from what it cost you to make up to its fair market value. Now, this does create some income for you, but you also get a donation credit to help cancel it out. That second one is a bit more complex, so it's definitely something you'd want to talk to an accountant about to make sure you're doing it right.
Okay, we've talked a lot about money going out, all your expenses. But what about when money comes in? Let's flip the coin over and look at the other side, income. We're going to talk about how to handle the money you receive, from project grants all the way up to those major career-changing awards.
All right, let's start with the simple stuff. As a general rule, if you get a prize or an award that's connected to your business or your job, you've got to count it as taxable income. Same deal for things like workshops or seminars that are provided to you through your work or a professional arts organization. Pretty straightforward. Project grants are interesting because they give you a choice. You have a strategic decision to make. Option 1 is to treat the grant money just like any other business income, and then you deduct all your expenses against it. This means, of course, you got to keep all your receipts. Option 2 is you can choose to use the scholarship exemption instead, and the nice thing about that is you don't need to track all those individual receipts. But here's the crucial point. You have to pick one or the other. You can't do both. So you have to figure out which method is going to work out better for you.
So we've talked about the regular income stuff, but what happens if you hit the jackpot? I'm talking about winning one of the big ones, a huge, prestigious national award like the Governor General's, the kind of prize that can literally change your entire career overnight. What's the tax bill on something like that? The answer? Zero. Zilch, nothing. That's right, for certain huge awards in Canada, you owe absolutely zero tax on the prize money. And it's not a fancy deduction or some complicated credit. The money just isn't even considered income in the first place. It doesn't even go on the form. So what's the magic trick here? Well, it's a special category called a prescribed prize. Basically, these are big-time, publicly recognized awards for outstanding achievement in the arts and sciences. We're talking about things like the Nobel Prize or the Governor General's Awards. The government has basically said that these kinds of honors are so important for the culture that the winners should get to keep every single penny completely tax-free. It's a pretty amazing acknowledgement when you think about it.
Wow, we've gone through a ton of stuff today, haven't we? From figuring out if you're a business all the way to maximizing your deductions and handling prize money. And here's the main takeaway. These rules aren't designed to trip you up, they're actually a framework for your success. So the final question I want to leave you with isn't really about taxes at all. It's about how you see yourself. Now that you know these rules, how will you consciously structure your creative practice? As the business it truly is.